The next session, which is on chrome alloys and ore, and it is being chaired by Mr. Subrakant Panda. So I request Mr. Subrakant Panda to come up on stage. Let's give him a big round of applause. I think we've had coffee and tea, so we should be all refreshed now. I would also like to invite our speakers for the session, Mr. Vincent Constant, Mr. TV Srinivas Shenoy, Mr. M. Venkatesh, and Mr. Anirudh Mishra. So our eminent speakers will be sharing their experiences and their knowledge with us. We also have with us Mr. Himanshu Bajaj, who will be speaking on the same session. So I request Mr. Himanshu to please come up on stage and join other speakers. So let me all introduce you to our chair, Mr. Subrakant Panda. He is the Managing Director and CEO of Indian Metals and Ferro Alloys Limited. He joined IMFA Group in 1993. Since then, he has handled various responsibilities within the group, including directly supervising the commercial division, along with holding additional charge of projects department. He initiated several projects which have had a significant impact on overall development of the group. His current role is to help define the broad strategic goals while independently supervising day-to-day management. Mr. Panda is also spearheading IMFA's move into power generation as a standalone business besides overseeing strategic acquisition overseas. So Mr. Panda, I will leave the floor to you now.
Thank you very much. Ladies and gentlemen, it's indeed a pleasure to be chairing this important session on chrome. I think it's rightly put out as the tagline of this conference as a whole, that India is heading towards and has achieved a lot of success in becoming a hub for ferroalloys. And I strongly believe that chrome alloys in particular is something that we have a lot of potential in. So without further ado, we will get into the session. So we have four topics today, or four speakers today. So roughly about 15 minutes per speaker, and what we will do is open up the floor to questions at the end of it. So please do focus on the presentations, but I'm sure if there is greater clarity on something that you would like from one or all of the speakers, then do make it a point to ask questions. So the first speaker for the afternoon is Mr. Victor Constant from ICDA. He will be speaking on global chromium scenario on chrome alloys and ore. Mr. Constant joined the ICDA, the International Chromium Development Association, in 2017 as market research and analyst. He is in charge of market intelligence and analysis in the association and produces annual and quarterly market reports, which I'm sure a lot of you present here read with a lot of anticipation. He has done a course in political science in McGill University and graduated from the School of Economic Warfare in Paris, France, with an expertise in economic intelligence and strategy. Victor.
Okay, so ladies and gentlemen, first of all, I would like to thank IFAC for inviting me today to give you an overview of the chrome and ferrochrome market in 2017 and in the first half of 2018. So as we only have 15 minutes, I'll get right into it. This is going to be a numbers-heavy presentation, but I will be, of course, available for questions afterwards. So to start, the chrome industry was on a growing trend in 2017. However, prices were volatile and registering a sharp fall from Q4 2016. Then prices seesawed throughout 2017 and H1 2018 amid fluctuating demand and instability, notably for the SA rand, for the South African rand and the Turkish lira. They have been dropping in the past weeks as well amid very high Chinese chrome ore stocks and dampened demand due to the summer shutdowns and environmental shutdowns in China. Okay, so let's get into it, and let's focus first on chrome ore and chrome concentrates. So in 2016, chrome ore production totaled 29.02 million tons, with metallurgical grade ore representing around 95% of production, chemical grade at around 3%, and foundry grade at 1.7%, and refractory grade at 0.2%. In 2017, production was up by 4.9%, reaching a total production of 30.4 million tons, with a breakdown in production by grade very similar to that of 2016. Okay, to get into more detail, metallurgical grade production was up 4.9%, chemical grade production was up 13%, foundry sand production was down 15%, and refractory grade production was up 15%. Now, to get into the chemical and foundry sand grades more in detail. So chemical grade ore is, as you may know, used to produce sodium dichromate. In 2016 and 2017, chemical grade usage in the production of sodium dichromate increased sharply. In 2017, around 90% of the chrome ore used to produce sodium dichromate was chemical grade ore. Foundry sand grade chromite is used to make quality foundry sands. In 2017, the production of real foundry sand grade chrome decreased, and the use of metallurgical grade ore for foundry sand purposes increased in kind. And as you may know, you need a concentration of at least 67% chrome to make good quality foundry sands. Okay, so in 2017, 95.45% of total chrome ore production was used for metallurgical applications. A small part of this metallurgical grade ore was used to produce chemical grade and foundry sand grade ore, but the vast majority of it was used in the production of ferrochrome or ferrosilicachromium, which was in turn used in the production of low carbon ferrochrome. Total ferrochrome production for 2017 was 13.28 million tons, and charged chrome and high carbon ferrochrome represented 93% of total production. Roughly 77% of ferrochrome production is used to produce stainless steel, with the remaining 23% being for engineering, alloy, and other steels. And now, as you can see on this graph in the bottom left corner, ferrochrome and stainless steel are still very highly correlated. Now, if we look at the breakdown by grade of ferrochrome usage, we can see great variation. Charged chrome is mainly used to produce stainless steel. This proportion drops significantly for high carbon ferrochrome and disappears almost completely for medium and low carbon ferrochrome. Now, charged chrome and high carbon ferrochrome can be broken down in 3 grades that are defined by their chrome, carbon, and silicon content. And we can see that certain countries have specialized in producing these grades. So charged chrome is mainly produced in South Africa, Finland, and Brazil. Low-grade high-carbon ferrochrome is mainly produced in China, India, and Zimbabwe. And high-grade high-carbon ferrochrome is mainly produced in Kazakhstan, Russia, Albania, Turkey, and Sweden. Now, if we look at the trends for the major chrome ore producing countries, in 2017, production in South Africa was up by 4% from 2016 and reached an estimated 16.6 million tons, however not coming back to its 2015 levels. In the first half of 2018, output was up 26% from the second half of 2017 and 29% year on year, reaching an estimated 10.59 million tons. Production in Kazakhstan was up 10% in 2017, reaching 4.52 million tons. And in the first half of this year, it was up 1% from the second half of last year and up 5% year on year to an estimated 2.32 million tons. Indian production was up 5% in 2017, reaching 4.12 million tons. And in the first half of this year, it was up 47% from the second half of last year, as the end of the Indian fiscal year was a good time for local producers, and it was stable year on year to an estimated 2.46 million tons, making it the second producer worldwide ahead of Kazakhstan. Turkish output was up by 9% in 2017, reaching 1.26 million tons. And in the first half of this year, it was up 8% from the second half of last year, and down 2% year on year to an estimated 649 kilotons. Now, production in Finland was down 9% as the local ferrochrome producers experienced some technical issues in 2017, and it reached 972,000 tons last year. In the first half of this year, it was up by 9% from the second half of last year, and it was up 29% from the year on year to an estimated 574,000 tons. And I've now included Zimbabwe on this chart because production picked up by 159% last year as the industry came back from the drastic export policies implemented in the past. Output has reached 477,000 tons last year as major producers came out of judicial management and new investors came onto the market. And of course, politically, the soft coup and government change of last November has become encouraging for investors as it rolls back on the Mugabe-era policies and expresses the desire to open up to foreign investment. This is confirmed in the first half of this year, where output was up by 56% from the second half of last year and up by 21% year on year to an estimated 334,000 tons. Now let's take a quick look at UG2. So UG2 chrome is a concentrate platinum byproduct that is produced in South Africa exclusively. Production has been on a growing trend since 2006, with the notable exception of 2014, when production was down due to a 6-month strike in South Africa. Last year, this trend was confirmed with UG2 production growing by 16.5% from 2016 and reaching a total of 5.12 million tons produced. And UG2 is also a significant part of the chrome ore industry, as it represented last year 31% of South African output and 17% of global output. This whole trend is confirmed in the first half of this year with an estimated 2.6 million tons of UG2 ore produced. Now, in the first half of 2018, global chrome ore production was an estimated 18.15 million tons, out of which 7 million tons were traded globally, with China being responsible for the overwhelming majority of imports, with 5.7 million tons imported, mainly from South Africa. The rest of imports were spread across Russia, Germany, Turkey, and the rest of the world. Notably, in the first half of 2018, Indonesia really emerges as the third largest importer, due to mainly to new installations by the Chinese producer Tsingshan. And 11.11 million tons of chrome ore were stocked or used domestically in the first half of the year. Now, if we take a quick look at the chrome ore and UG2 prices last year, so the lumpy chrome ore prices are the chrome ore prices are on top, with Turkish and South African lumpy prices and the South African concentrate price, and the UG2 prices are on the bottom. So as you can see, they've both followed the same general trend, dropping sharply in Q1 after dropping sharply in Q1 of 2017 after late 2016's dramatic rise. And at the beginning of Q2 of last year, prices hit their low point and picked up again amid growing demand. This carried out through Q3, dropped a bit in Q4 amid soft trading and demand, and then in the first half of this year, prices were up again before dropping, stabilizing, and then dropping again over the summer amid dampened demand and historically high Chinese stocks and also unstable currencies. So now if we turn to ferrochrome, I would like to first start with China, as it is by far the first ferrochrome producer in the world. So China's ferrochrome production capacity is estimated to be around 12 million tons, with 175 plants active last year, the vast majority of which are low capacity. As the other countries have much lower numbers, and since these low capacity plants are a great source of pollution, we believe that that some changes are coming to China in the next few years. China surpassed South Africa in terms of production in 2012 and has been following this trend ever since. South Africa has a production capacity of around 4.3 million tons, Kazakhstan's is around 1.5 million tons, and India's is an estimated 1.3 million tons. And it's worth noting that production, so in green on the charts, for 2017 in both India and Kazakhstan were very close to capacity. Now, if we'll look just really quickly in a bit more detail at Chinese ferrochrome production, we see that producers are present in 6 main regions with a differing number of plants and capacity. The number of 100 to 200,000 ton capacity plants has more than doubled since 2016, but the vast majority of plants are still low capacity operations. In the first half of 2017 and in 2017, the Chinese government led some major environmental inspections in the country, due to which 70 plants suspended or stopped operations. And as I said before, in the future we can expect a concentration of plants in certain regions and the increase of more modern and high-capacity plants with a gradual disappearance of older, low-capacity installations, as we expect the government to enforce more and more environmental regulations. Now, if we look at the big trends in the ferrochrome producing countries in 2017, overall production was up from 2015 and 2016. China's 2017 output was up by 16.5%, as local ferrochrome producers were encouraged to increase output by the higher tender prices from the Chinese mills and a higher stainless steel output. In the first half of 2018, output dropped 10% from the second half of last year, but rose 10% year on year to 2.7 million tons. In 2017, South African output was up by 5% from 2016, amid higher prices and increased global demands in all areas of the supply chain. In the first half of 2018, output was up by 45% from the second half of last year and by 29% year on year to an estimated 2.57 million tons produced. In 2017, Kazakhstan continued its steady growth, with output growing by 13.6%. In the first half of this year, it was up 7% from the second half of last year and up 5% year on year to 751,000 tons. Indian production was up by 23.2% last year in response to higher domestic chrome availability. In the first half of this year, output was down 8% from the second half of last year and down 13% year on year, reaching 583,000 tons. Finland's production was down by 11.6% last year, mainly because Outokumpu experienced some technical issues with one of its furnaces in the first half of the year and led some maintenance operations in the second half of the year, which also reduced its alloy consumption at its on-site stainless steel works. In the first half of this year, production picked up by 2% from the second half of last year and by 23% year on year to 232,000 tons. So charged chrome and high carbon ferrochrome global production for the first half of the year totaled 7.33 million tons, with an estimated 4.13 going to domestic use and stocking and 3.2 being traded globally. So now if we look at charged chrome and high carbon ferrochrome imports for the first half of the year, we can see that South Africa is the main overall exporter, with the proportions varying depending on the region. In the Americas, the major sources of imports are South Africa, Kazakhstan, and India, with 51% of imports from South Africa, 13% from Kazakhstan, and 11% from India. In the European Union, the major actors are South Africa, Finland, Sweden, and the Netherlands, with 39% of imports from South Africa, 13% from Finland, 7% from Sweden, and 6% from the Netherlands. In Asia, the sources are less diverse, and the major players are South Africa, Kazakhstan, and India, with 56% from South Africa, 21% from Kazakhstan, 17% from India. Now, if we compare with the import figures from 2017, we see that Turkey's share of exports has dropped significantly, and South Africa and Finland have dropped as well. Meanwhile, India has kept a stable share of exports, and most notably, Zimbabwe is now exporting a non-negligible amount of alloys in all regions. Now, to get a better look at those trading patterns, okay. Well, all right. Sorry, I'm out of time. I mistimed it. Yeah. All right. Well, basically, so these are. If you can look at it in more detail, the presentation will be available. But these are the main exporting countries. As you can see, India is in third place with the main destination. And the main takeaway from this slide is that Indonesia is now a major importer of high carbon ferrochrome. Okay, so we can see that in China the trend has kept, and that as Chinese stainless steel output has grown by 10% in year-on-year in the first half of this year, the ferrochrome production has also grown by 10% year-on-year. Okay, so just really quickly, the medium carbon and low carbon overview. So the takeaway is that the first half of this year was lower than the second half of last year, but higher than the first half of last year. And Africa is now is now producing more than it has been before, and Eastern Europe has dropped slightly in share. So in terms of exports of imports, Russia and Kazakhstan are the major actors in for medium and low carbon exporting. And okay, so this is an important slide. So if you'll allow me just one more minute, this shows the state of Chinese chrome ore stocks and Chinese ports. So as you can see, this year the amount of stocks have skyrocketed. Just last week, they were at 3.83 million tons, which is the highest it's ever been, and it went over the 3.5 million ton bar over the summer. And as you can see in the bottom left corner, this, combined to other factors that are explained, has led to the drop in chrome ore prices that we've seen recently. And this is, of course, all affected as well by the Chinese stainless steel demand, but this will all be available in my presentation to consult later on. Okay, so to wrap up, the main takeaway is that Zimbabwe is back on track. India is a major actor of the chrome industry, and Indonesia is now a major importer of chrome ore. Okay, and well, there are a lot of other things I could say, but I'm out of time. So please come and join us at our Chromium conference in Bautu and meet with the topmost experts of the chrome industry. We're looking forward to seeing you there in November. And thank you for your attention. Sorry for going over, and thank you very much.
Thank you, Victor, for a very informative presentation, very detailed statistics, which I'm sure people would appreciate, getting to look at in greater detail, and perhaps catch up with you later on in the day. The second presentation for this session is by Mr. T.V. Srinivas Shenoy from Tata Steel, who will be speaking on ferrochrome global perspective, and more importantly, what it means to India. He is an engineer come MBA who joined Tata Steel from the campus in 1992 and has worked in various strategic business units of Tata Steel, and is currently heading the Ferroalloys and Minerals SBU as the Chief of Marketing and Sales, currently with the Ferroalloys and Minerals SBU. With over 2 decades of experience in various functions, operations, sales channel, B2B sales, etc., and having handled various brands of the Tata Group, he's very well qualified to be talking on the subject today. So without further ado, if I could request Mr. Shenoy to make his presentation.
Thank you, Mr. Panda. And good evening, everyone. It's a big pleasure for me to be here presenting before you. But before I start the presentation, I think it's more than apt to thank 3 sets of people. First, Mr. Manish Sharda and the entire team of IFAPA for having organized this session. I think it's an outstanding session, and I think we all need to give a big round of applause to the entire IFAPA team for having pulled this off. This kind of demonstrates the kind of energy which India is displaying today. The second set of people whom I'd like to thank are all the stainless steel and the carbon steel manufacturers, without whom our salaries of the chrome alloys and the manganese alloys wouldn't have been paid. A big thank you for being here. And the third set of people are all those people who are back at the mines, who are not here today, back at the factories, who are slogging it out at the furnaces, without whom we wouldn't have been seeing the alloys produced. Thank you for all of them who are back out there, being there for all of us. But before I start, the mandatory disclaimer. When I was on the way back to the airport from to the hotel, I must describe you a small little anecdote uh, what describes India all about. So there was this director of JLR who had come in from with Europe with me, and he was driving from the hotel, from the airport to the Oberoi, and I was driving with him, and he told me this: TVS, for all the time which you've driven from the airport to the hotel would have been 45 minutes drive, and he told me this: the amount of honking he had heard in his car, what he heard in his lifetime, he heard it in 45-minute drive. This kind of summarized what India is all about. For us, it was something taken for granted. Choco-block cars, so much of energy of people all around, something which we take for granted was something amazing for him. So when we look down at the topic and see what does India, world means to India, I thought it was more than apt to say, what does India mean to the world? And being a fiercely proud Indian, I would like to articulate this. We just completed the first quarter of this financial year. And for all of you know that we have got our first quarter growth of 8.2% in this year, which is in many ways one of the highest in the past 2 years. Just to give a thumb rule, if you put the GDP at 2012 prices and look at the current year GDP of this particular quarter, compare it with last particular quarter, you will see a rise from 33.7 trillion to 31.18 trillion. India's GDP is in safe hands now. We have come out from the pangs of demonetization. We're getting into stability of the GST regime, and I think the future is all bright to be seen. And finally, what does it compare against China, the most talked about economy? We grew at a pace which is faster than China, which grew at 6.7% at this corresponding quarter. So all in all, if you sum it up, what India means to all of you and for all the delegates who have come from outside, we are in a phase of growth. We are in a world-beating pace of growth and one of the fastest growing economies this year, even beating China in the first quarter. And on top of it all, we have heard all the presentations right from Mr. Mathur in the morning to Victor in the evening of how India's position both in the carbon steel and the stainless steel industry is taking shape and arising to be the second position globally. But what does it mean in terms of the world production versus India's production? There's a quick snapshot of this. This is how we see India growing in this particular year. So this is all 2018 calendar year estimates. We have seen that the stainless steel globally is expected to be at 50.7 million against 48.4 last year. Again, a growth of around 5 to 7%. India is also planning to grow in the line of around 7 to 8%. So India's growth is almost at 3.8 million tons of stainless steel. What does it mean in terms of ore, and what does it mean in terms of chrome alloys? So India is roughly, as a thumb rule, we are producing almost 1.3 odd million tons of chrome alloys, and the globe produces close to 13 million, so we are 10%. So India is 10% of the chrome alloys of the world. And look at in terms of the dollar size, in terms of the revenues which the Indian chrome industry is generating, is almost 12 to 13,000 crores at $1.5 billion turnover. Well, the prices would depend upon what the prices are, between 80, 90, 100 cents. It could vary a few $1 million here and there. But thumb rule, 10% of the globe is what India is, and we are almost $1.5 billion producing almost 12 to 13,000 crores this industry is all about. When we have to connect back the dots and look at what the industry is all about and what does it mean for India, there are plenty of dots to connect. And if Steve Jobs was here, it would have been impossible for him to connect the dots. But if you kind of put the points together, I will talk about what does geography mix mean. Will be impossible. The ferrochrome alloy industry would not be here if the stainless steel markets didn't grow. The currency movements has come in place last year very, very significantly. And of course, the Chinese export stocks, the ore prices, etc., also determine how the industry is going to be shaped. Each of these has a significant impact, and some of these may die down over a period of time. But each of these at this point of time has an important dot which needs to be connected in terms of the global markets. And I would like to touch upon each of these in my slides as I go ahead. Victor did talk about the global play, but here is something which I'd like to all of us to reflect back just a minute. What is key in this particular slide if you have to look at these slides here, of the 30 million tons which is being produced in India, globally, India produces close to 1.3, and also if you notice, India consumes close to 0.6. And if you notice what is common between both these charts in both the graphs is perhaps India, which is quite comfortably placed in production, India quite comfortably placed in consumption, and the balance India exports out. You look at South Africa, very strong in consumption, in production, but no consumption. Look at China, entire or almost entire part of the ore coming outside. EU, partly being produced there, but mainly coming from outside. Kazakh and others only producing, not consuming. So what it clearly is emanating out, India is by default a risk driver, a risk mitigation driver. Of all the countries which are positioned, whatever happens, God forbid, to other countries across, India is well insulated in terms of addressing our capacities. And going ahead, when India stainless steel is bound to grow, the stainless steel alloy, the ferrochrome and chrome alloy industry in India is going to mold itself together to substantiate the Indian growth of production. This is something very interesting. This was data of 2 days ago, and I think over the last 2 days, the data has again gone down for a significant change. Rupee is just at about $72, 72 to the rupee. I believe today ZAR has crossed 15.5. So last 2 days it has depreciated by another 5 to 7%. Chrome, lira, you know what has gone over the years. So as a marketing person, there are two messages which I'd like to leave with all of you on the table. What happened a year back and what happened a month back kind of gives us a good indication what the market for the next month could be shaped about. India depreciated almost 12% from 63 to 71 over the last 12 months. More importantly, it depreciated only 4% in the last month. Most of it has already been built over the last 10 to 12 months. Correspondingly, look back at South Africa. Of the 14%, actually it is down today, it's around 18.5% devaluation compared to a year back. Most of it has happened only last month, and most of it has happened in the last 3 to 4 weeks. So South Africa is still able to grasp or is to understand or digest this into its prices. The lira, lesser said that more, is almost depreciated 100% over the last 1 year. China continues to be stable at these levels. So obviously, each of these have got an impact on the prices, which will definitely be having a stake in buys in the short term. Well, I'll quickly skip these slides. I think Victor has touched upon it in terms of the key drivers to what the markets are. We have also seen that globally, we have seen the sweet spot of globe between India and China growing, and we're seeing almost India looking back at 2 and then growing to 3.8. When I was having an off-site discussion with Mr. Panda, he was making a very interesting comment that in 1997, India was actually higher in terms of stainless steel production than China. And imagine over the past 2 decades, China and where is India? But India is still second and still a long way to go. But that's the kind of rapid strides which China has taken. Overall, a very good scene for the entire steel industry, which is pegged at almost 50 million tons annually. Well, the fortunes of stainless steel and ferrochrome go hand in hand, very well depicted over the period of past few years. This was the data which Mr. Panda was talking about, but this data is from 2001. And look back very close, 2001, India at 0.8 million and 0.9 million was China. But look back at the growth of the last 2 decades. India, we're at 3.8, and China is almost 50% of the stainless steel consumption in the world, the way it has grown. A phenomenal story, which India is to follow. This is another interesting slide which talks about the growth of China and the power of South Africa diminishing in terms of its alloys. While it still continues to be a big player, the South African spread in the alloy sprays has actually consistently gone down, even the volumes have gone up, and the spread of China going up here. India constantly remaining at almost 10% of the global ferrochrome production and demand. What can we say without getting a bit into China? We heard about how Indonesia was growing in the morning. What is also important is what is China doing beyond and to fortify itself. So all those mills which are in the north and northern part of China, if you see that they're always landlocked, it's very tough to cart all their ore all up way from down south. So the part of extending it to Pakistan and getting a port done is something which will be interesting to watch out for. China is inevitably going to to Zimbabwe. We have seen lots of movements being done there. We also seen China setting up in Indonesia and also making moves in India. So obviously we're seeing a new norm which is being developed by the Chinese player and not restricted to China. So this is something, an interesting play which will definitely have for us. Well, the good story is the stainless steel industry in India continues to grow and backed up with the ferrochrome production, which is almost at 6.4, that's the consumption versus 3.8 million tons of stainless steel production. So a very good story from the Indian perspective. Well, these are the series of events and all of us are quite more than aware. If you have to stay in the ferrochrome industry, I think you need to have 5 or 6 hearts because you never know when one will collapse at the kind of prices which go up and down. But I think the entire industry has kind of lived through it and kind of adjust itself from almost 100,000, this is all ex-plant prices from, we have touched 110,000 tons not too long ago to almost 60,000 odd tons, 60,000 rupees a ton, which other industry can survive by 40 cents difference over a period of short months of 3 to 4 months. I think we have been able to live through this industry. Interestingly, we have kind of pegged, this slide is talking about the bar steel prices, the red one talks about, the green one talks about the India's ferrochrome prices and obviously the benchmark prices in the EU. The Chinese prices invariably cascade back to India. Today what we are seeing is, I'll show you a slide a little differently in terms of September when prices have actually gone up this particular month. Yesterday was significant in many ways. And of course we all eagerly await the benchmark. I'm sure that there will not be too many surprises for the Q4 benchmark which is going to be announced very, very shortly. It's Q3 benchmark. Well, this is for all those who have been outside this is a very interesting slide which kind of depicts what India is all about. If you have to classify the Indian ferrochrome industry, there were 3 kinds of groups which you could articulate. One which got only the captive mines, one who have got only smelting, and one who have got smelting as well as ore. And these are the various companies who are having these kind of structures. And what determines the success of a industry in India is who's got the access to what kind of to the power or to the ore or to the mines alone. So you could actually be a very smart trader only producing ore, or you could also be at the extreme end of the value chain which produces ore, also has power and also been able to have its own production facilities. This is what perhaps signifies the markets in India. But what is more important in the recent past has been the government's drive in terms of debts and in terms of ensuring NCLT processes. So we've got a huge debt overhang at almost $3 billion or 20,000 crores, which needs to be coming back home. So that's something very interesting for the industry to watch out for. I'll quickly take you all through what the industry is. So yesterday we had an OMC auction, and for all of you know that the prices over the last 1 month in India would have gone up by close to 8,000 to 9,000 rupees a ton. Look at some thumb rules which for all of you need to understand. At almost 12,500 rupees or 12,000 rupees a ton of chrome ex mines, it translates to almost 30,000 rupees of chrome cost in per ton of ferrochrome. With the kind of dollar rate and the kind of cokes, today this price is almost gone up to 4,500 rupees. And power has almost been at 5.5 rupees, at 3,800 units, it comes to almost 22,000 rupees a ton. So today we should be looking at 75,000 rupees a ton as the cash cost of India, depending upon the location and where the unit is. A very, very interesting slide which depicts what has happened over the past 1 month and the change which is there. What does it mean in terms of the units? I'm sure Venkatesh is going to touch upon a little more of India, so I'll perhaps skip these slides. I'll skip these slides. While only a part which is important to know is as India steps into the norms of captive mines and merchant mines which come about for auctions perhaps next July, a lot of things are going to change, but the government is doing its bit to ensure that the transition process of the mines is elegant and done fairly. I come down to the last slide, and perhaps this summarizes what India is all about and what the Indian ferrochrome industry is all about. At one end, if you look at what we have seen, the stainless steel story in India, well balanced, all set to grow. The Make in India story is something very strong and robust. On the right hand side, what we saw today morning, as well as through Victor when he spoke, there's plenty of production, we export a lot of it, but still there's a lot of scope for that to be used in India. So chrome alloys in India is a very good story. The stainless steel is a very good story. So whatever happens to the world, India is well poised to handle the global swings. Thank you for patient listening, and I look forward to any questions which are there at the end of the day. This slide, this photograph kind of depicts for all of you who have been in Sukinda, and the mines in Sukinda is a wonderful visit. Lots of schools, and I think if you all can do something about it, this is actually a school photograph of one of the primary education centers in one of the mines in nearby locations, which really shows what the power of India is and what the girls in India can really do. Thank you so much. Thank you very much.
Thank you, Mr. Shenoy, for an excellent presentation. Really brought out, I think, the potential that India has, which you have achieved to a large extent, but I think it's time to step up our game, which I think was the basic message of your presentation. The third topic for this session is on Indian chrome ore industry, an overview, challenges and outlook by M. Venkatesh, who has been with IMFA for the last 24 years in handling various functions like domestic sales, logistics, international trade, etc. And of course, over the last 5 years, he has headed sales and marketing function of the company. Venkatesh has a degree from Ravenshaw University in Orissa, and then has undergone the MEP, or the Management Education Program, at IIM Ahmedabad. And he represents IMFA in the Market Intelligence Committee of ICDA. Venkatesh, without any further ado, on Indian chrome ore industry overview, challenges and outlook.
Thank you, Mr. Panda. I'm just wondering whether to make this presentation or not. The first part was covered by Aloy, and half the other presentation was covered by Shenoy. But anyhow, I'll try to bring out something different. At the outset, I would like to thank IFAC for giving me this opportunity to be here and speak to such a distinguished audience. As we all know, chrome ore is the starting point for chrome alloys. And with the auction coming up in 2020, it would be interesting to know the current status of the Indian chrome industry. Before I come to the Indian scenario, I just want to give an overview, the global overview. The total reserves in the world are approximately 9,200 million tons. India's reserve is 54 million tons. It is a mere 0.6% of the global world's reserve. Global chrome ore production in 2017 was 30.4 million tons, as already told by Aloy. This was up by 5% compared to 2016. Not surprisingly, South Africa accounted for 55% of the production, and India's share was 13%. Chrome ore can be divided mainly into 4 grades: the metallurgical grade, from where we get ferrochrome, charged chrome; the chemical grade, the foundry sands, and the refractory grade. 95% of the chrome ore mined is used for metallurgical application, and the balance for chemical, foundry, sands, and refractory. High carbon ferrochrome and charged chrome production represents 92% of global ferrochrome production, and about 2/3 of ferrochrome is used in the manufacture of stainless steel. If you look at India's position in the global ore industry, in terms of global ore reserves, India has the world's 6th largest reserves after South Africa, Zimbabwe, Kazakhstan, Turkey, and Finland. In terms of chrome ore production, India is the world's third largest after South Africa and Kazakhstan. Now going back to the Indian chrome ore industry, chrome ore was first discovered in 1903, and almost the entire reserves in the country are in the Sukinda Valley of Orissa. In 2017, about 4.1 million tons was mined, out of which 4 million tons was consumed domestically, which included stock as well, and about 100,000 tons was exported. Further, about 140,000 tons was imported, mainly from South Africa, and lumpy ore from Oman. If you look at the ore producers, the mines, like Shenoy had shown a small clip, the mines can be categorized into merchant mines and captive mines. Merchant miners are OMC, Tata Steel, BC Manti, Mistry Lal Mines, and IDC. The captive mines, Balasore Alloys, Facker, Infa, Jindal, Stainless. If you look at the top 2 lease holders in India, OMC has about 5,829 hectares, and Tata Steel has about 406 hectares. Of course, OMC does not mine in all the areas what they have. We do mostly open cast mining in India, but Infa has already started large-scale underground mining operations in the Mahagiri mines. Between 2015 and 2017, the production went up by almost 1 million tons, which is a rise of about 37%. While the production from the captive mines came down by 11%, the production from merchant mines increased by 66%. This is not much of a surprise considering the short lease period that is till 2020 for most of the merchant miners. In the first 6 months of 2018, the merchant mines have already mined about 73% of their 2017 output, while the captive mines have mined only 54%. Focus on value addition. As we all know, ferrochrome is manufactured from chromite ore or concentrate and is one of the vital input raw materials for manufacture of stainless steel. In order to make the chrome ore available for domestic ferrochrome manufacturers, and in order to have value addition within the country, various measures were taken by the government. Starting with export of chromite ore and concentrate being canalized through MMTC on 31st March 1995, to imposition of export duty of rupees 2,000 in 2007, and increasing this export duty to 3,000 rupees from March 2008, and subsequently the export duty structure was changed to 30% ad valorem with effect from 17th March 2012. Hence, it is of no surprise that there has been a sharp decline in export after imposition of export duty and focus on value addition. Exports have come down from about 1.2 million tons in 2003 to a mere 100,000 tons in 2017. We face a lot of challenges in India. India's deposit of chrome ore are a meager 1% of world's chrome ore reserves. We have the lowest per capita reserve ratio among chrome ore bearing countries. If you look at our reserve ratio, it's just highlighted in blue, which you can have a look. Increase in levies, I think so, Shana had shared a slide, DMF and NMET. We have to manage multiple stakeholders, which would include various government agencies, the local communities, now judiciary, and many others. Logistics, for all those who are located in Sukinda Valley, logistics is a major concern. Till date, we need to deploy only 6-wheeler trucks for local transportation. You're not allowed to deploy higher capacity vehicles. So the rate per kilometer per ton is ₹9, which is even much, much higher than the government rates, which is, I believe, ₹6.60 per metric ton per kilometer. If you have a look at the outlook now, the tenure of all leases as per the new MMDR Act, the tenure of leases has been increased to 50 years. This helps in investment with a long-term view. Now, grant of all mines through auction, this brings about a much greater transparency. Auction in 2020 would change, what we believe would change the industry structure. Also, post-auction, we believe the chrome ore prices are likely to go up because, when it comes up for auction, there could be multiple bidders, and so acquiring the mines the price could go up. And also, most of the miners at some point of time need to go underground, and raising ore from underground mines is going to be expensive. In conclusion, given India's minuscule share of global chrome ore reserves, it is necessary to preserve it for domestic value addition. Follow the Chinese model for long-term mineral strategy. They are the largest producer of iron ore, but do not export. Value addition is the key to sustainable mining. This ensures equal benefits to corporates and societies. Opportunities, challenges, and competitiveness depend upon access to resources. The key event, like we discussed before, the key event is the 2020 mining auction, and we need to see what happens then. Thank you.
Thank you, Venkatesh, for a great presentation. Last, by no means least, we have a presentation on metallurgical coke, which is, of course, a key input in as much as ferrochrome production is concerned. So in addition to, getting an idea into the alloy itself and chrome ore, this sort of rounds up the session in terms of giving us an idea on how met coke and its dynamics, what it means for the Indian ferroalloys industry and how it's going to pan out. To make this presentation, we have Mr. Himanshu Bajaj, who is the Senior Vice President at IMR Metallurgical Resources AG, and has an extensive understanding of steel-making commodities like coking coal, thermal coal, etc. So Himanshu has done his engineering from IIT ISM Dhanbad in mining engineering and MBA from IIFT, and is associated with coke and coking coal business for the last 15 years. So clearly very, very qualified to be talking to us on this subject. Himanshu.
Hello, everyone. First of all, I would like to thank IFAC for giving us this opportunity to talk about coke and talk about IMR as a company and how we are doing. So we'll talk about the coke market, its impact in ferroalloys, and what are the different size of coke is required in the industry, and how the entire coke market moves. So to start with, just briefly, I will talk about IMR. We are doing almost 18 million ton of raw material annually, and our revenue has been around $2 billion annually. We are into met coke, coal, coking coal, scrap, ferroalloys, and thermal coal. And our market is majorly into India, Europe, Southeast Asia, and the Americas. So this is where we are placed. So red dots are where we have our offices, permanent offices. There are green are our partner offices, and these are our black marks are all our operating locations. So we also have our one Indian company through which we do all stock and sale business to cater small requirement and also to cater just-in-time sort of requirements. And we are doing met coke, coking coal, steam coal, and ferro scrap from these places. And also, we have started our new desk to do manganese ore and the alloy business. So, IMR, now talking about the coke business, we have been doing coke for last 16 years and have almost 35% market share consistently for the over of last 10-15 years. And out of the nut coke coming into India, we are doing almost 45 to 50% of the nut coke which is used in ferroalloy production. So these are the locations where we have our offices and our plant and our location from where we operate for the domestic business. So now talking about the Indian steel and ferroalloy market. So if we see that India is number 4 in 2017 in terms of steel production, and now we are going to cross Japan and maybe going to become the number 3 in steel making capacity. And if you see, as on date till July, we have produced almost 61.8 million ton of steel. So with the view of Make in India campaign and creating job, having our own manufacturing facilities, the government is pushing for the steel production, and they have a vision to 2031, and we are planning to reach a steel making target of almost 300 million ton. So there are macro factors which is in advantage of India. We have a inherent domestic demand. We have cheap labor. We have iron ore resources, which is the main raw material. And now with the new government, we also have a lot of policy initiative which are mentioned here. So it is very likely that we will be touching the target of what is planned in 2031 mission. So now coming to the Indian ferroalloy industries. Indian ferroalloy industries, just as the steel industry is going, ferroalloy industry is also likely to go with CAGR of 5.9%. And major ferroalloy products in India are ferrochrome, ferromanganese, and silicomanganese. And as our other presenter have said, we are producing almost 10% of the ferrochrome which is produced globally. And in terms of ferromanganese and silicomanganese, we are producing 0.6 and 2 million ton approximate. So overall, we are producing 4 million ton of ferroalloys. So now coming to the coke as a raw material. So if you see, for 1 ton of ferrochrome, we need almost half a ton of coke. And considering the 1.4 million ton of production, the coke, special size coke, which we call nut coke, is required almost 0.7 million ton to cater to the ferrochrome industry specifically. If we add on silicomanganese and ferromanganese industry as well, where they are using all other sort of, apart from coke, they are using other sort of redundant as well. If we consider that, they are using almost 200 to 300 kg of coke for production of 1 ton of silicomanganese. So combining both the things, the requirement of special sized coke for ferroalloy production in India is almost 1.4 million ton. So if you see the cost wise, coke is one of the major cost element, considering almost 20% of the entire requirement, 20% of the entire cost if you see, and it comes after ore and electricity. And so considering this thing, it's a very sensitive cost element for any ferroalloy producer, and quality of coke is also an important parameter which cannot be avoided and cannot be compromised. So based on the furnace sizes, we have different size of coke which is used for different size of furnaces. So there are different grades, 5 to 15 mm, 6 to 20 mm, 10, 20 and 10, 30 mm size, which we call nut coke, is used for the ferroalloy production. And as we have seen that Total nut coke requirement is 1.4 million ton. So considering the domestic availability through domestic cokeries, steel plant left out of the blast furnace coke and all, so almost 0.5 to 0.6 million ton of coke is produced in the domestic market or is available in the domestic market. So the gap of demand supply is almost ballpark 0.8 to 1 million ton. And last year, India imported around 0.85 million ton of coke, of nut coke, out of 5 million ton of the entire coke and other coke related products. So if we see the demand supply gap, so India requires 36 million ton of coke, and out of that 36 million ton of coke, 31 million ton of coke is produced in the integrated steel plants and also in the merchant cokeries. So the gap is almost 5 million ton, and that gap is catered by the import of coke. So out of this 5 million ton, almost 0.8 to 0.9 million ton should be nut coke. So if you see, now coming to the domestic industries, merchant coke industries, almost 50% of the domestic coke is produced in the small coke oven. So for them, they are not very regular in terms of production. There is a lot of shutdowns, and because of the coking coal coke price difference and all. So the supply side is very, you can say, inconsistent in terms of coke from these small cokeries. So if you see the nut coke, out of 100 ton of coke which is produced, almost 8 to 9% is the nut coke, which is like 5 to 30 mm size, in different size segments. So if we see 5 million ton of coke is, merchant coke is getting produced, only 0.4 to 0.5 million ton is the nut coke. So there is an issue in terms of that production cannot go beyond a certain level for nut coke. Also, these small cokeries, they have inconsistency in terms of production. So these gaps are generally covered by import and also the secondary left out coke from the steel plants. So there are issues with the merchant coke production, that is majorly the coking coal price variation. Indian merchant coke industry doesn't have their own coal apart from the small cokeries in Dhanbad region. So for their coke production, they are 100% dependent on imported coking coal. And when the prices are high and the coke prices are low, the demand supply, the cost balance is not there, then they generally reduce their production, and in terms of, that creates an inconsistency in terms of availability of coke. So if you see globally, what are the factors affecting the coke market dynamics? So China, being the 60% producer of the merchant coke, they have a prominent role. So 60% production means like they have all the cards in their hand, and in terms of coke production, India is also dependent on Australian coking coal and other parts, US and Australian coking coal majorly. So if we see, the entire coke production is dependent on either imported coal or imported Australian coking coal and other US coking coal. So we don't have our own internal domestic supply consistency for use of coke. So as China is the biggest producer, they generally govern the prices, and whatever the Chinese prices are, all other countries who are doing export of coke or even the Indian cokeries put their price accordingly to match up the Chinese coke prices. So hence, coke prices and supply consistently is dependent majorly, very heavily on policy governed in China and the coke production and the prices which are prevailing in China. So what should be the way forward to have a consistent coke supply at a low cost? So if we see from all these data that China is the major factor, and importing from China is our requirement and is not a choice for us. So in last 2 years back in October 2016, government has put anti-dumping duty on the coke of $25 from the China and $16 from Australia. So that has increased the cost of importing coke for all the buyers. And if you see the 5% import duty on the coke and other cess and things, the impact, and considering a ballpark price of $300 for coke, there is a duty element of $40 to $45. That is almost 3,000 rupees. And considering a 0.5 ton requirement of coke for 1 ton of ferroalloy production, the impact is almost 1,500 rupees, or you can say almost $20 to $25. So as we have seen, even after the anti-dumping duty, the import of coke has not gone down. So we are seeing, but yes, the prices of coke has gone up in India. So the merchant cokeries are using this anti-dumping as a mean to increase their price, and ultimately it is affecting the steel industry and the ferroalloy industry. With the government's initiative to go for a Make in India campaign, this is not in line with what government philosophy should be, because this anti-dumping duty was implemented when coke prices were like $100, imported coke prices. So that time it was required to have an anti-dumping duty, but now the coke prices are so high, and after that having an anti-dumping duty is creating pressure on steel and ferroalloy producer. So ferroalloy and steel industry is much, much bigger than the coke industry. Coke production is not a very environmental friendly industry. It's not a very much big job creator industry. And in fact, it is impacting ferroalloy and steel making cost. Apart from coke, in ferroalloy, especially ferromanganese, silicomanganese production, we are using other sized coal, anthracite, and for these products also we have a high import duty and cess. So if we consider all these things, these imports with these duty elements, these are really impacting the cost of import. So our suggestion through this forum, because this is a very strong forum, to talk to the ministry and pursue to waive off this anti-dumping duty and also reducing the import duty so that cost of production of ferroalloy and steel is reduced, and the Make in India kind of thing is really made sustainable, because Make in India cannot be sustainable with high cost. And with this, I will finish off my presentation. Thanks a lot.
Thank you very much for an informative presentation. I would now like to throw the floor open for questions. If you have any question, please raise your hands and identify yourself and keep the questions brief, please. You could direct it to any one of the 4 speakers that we had in the session. Okay, let me at least take the lead in asking one question, if I can ask that of you, Mr. Shenoy. I think you captured very nicely the structure of the Indian ferroalloys or ferrochrome industry, that with a surprisingly large percentage of the capacity being non-integrated. What, in your opinion, is the medium to long-term future in case of such capacity?
If you have seen, I don't know if his voice is clear. So if you've seen the cost structure of the industry of the chrome alloys, you'll see that there are 3 elements to it. So power is almost 30%, ore is almost 30%, coke is now creeping up to 20-odd%. So what the strategy would be defined and what the industry will take shape is depending upon who will have the power, who will have the control over power, and who will have the control over the ore. So going ahead, most of the companies would like to backward integrate into having their own power, so insulate yourself against the varied power costs which are there at 5 rupees 50 paisa. And second part is, everybody also will try to structure their backend in terms of supporting ore. So going ahead, what we can see is 2020 coming, there will be a lot of restructuring of the industry which is going to take place. There will be dynamics which will shape up again, and post that, when the new mine owners come about, I think that will define who is going to stand and win the long game. But clearly said, going ahead, what we can see the writing on the wall is, from the ferrochrome producer's point of view, India is a long-term consumer of ferrochrome and is going to stay. Right now, we are having almost 50-50% between producing and consuming in India and exporting out of India. But once you tighten up your supply chain and you ensure that you're backward integrated into having your own costs done, you will see more and more of it being produced in India and sold into India. So to that extent, I see that going ahead, there will be a churn in way the power, the ore, and the logistics which are needed to serve the Indian customers is going to change.
Sir.
Thank you. I actually completely endorse what you're saying, because although exports have been a mainstay of the Indian ferrochrome industry, I think going ahead as stainless steel consumption and thereby production picks up, I think there will be an orientation towards more and more domestic supplies.
Yes, hi.
Nigel.
Nigel from CNBC TV 18. Mr. Venkatesh said that one of the challenges could be the auctions that are due in 2020. What are the chances of it not happening in 2020, getting delayed from there? We have a big general election coming next year. Do you think, any of the panelists, will we be ready for 2020 auctions?
It's not for us to get ready, it's for the government to get ready. So
exactly, sir. But what are the chances?
So I think we have to go back to the government and ask them that question, because I'm not in a position to tell you. It's scheduled to be held on 2020, so I believe it's going to be held in 2020.
You believe it's going to be done? Super.
Nigel, if I can just supplement, although as I'm chairing the panel, it's not for me to answer, but just to highlight highlight the fact that there has been apparently a lot of preparatory work going on, but as to whether there is a last-minute slip between the cup and the lip, I think it's very hard for anyone to really predict that.
We'll stay tuned then for that.
Are there any other questions from the floor? Great. With that, I would like to bring this session to a close. I would like to thank all four panelists for excellent presentations, I think, which gave us an insight into the length and breadth of the industry. And I would be remiss if I did not also congratulate IFAPA, and more specifically Manish and Mr. Durga Prasad for the excellent work that they have done in putting this conference together. Having organized a conference myself, I can only sympathize with them, because very few of us know how much effort it takes to put something of this magnitude together. So well done, and wonderful. Thank you very much.
Thank you, sir. I think Mr. Panda has concluded it so beautifully that I need not add anything. I would request you to present mementos to our speakers. All our speakers have shared their valuable insights with us, and also our objective of this whole conference, which is India, the Ferro Alloy Hub. That's what we want to make it, and all of our speakers for today's session have provided such important information for all of us, for all of our delegates. Thank you all. I would now also request Ms. Arshia Sibia to please come up on stage and present the token of our appreciation to Mr. Panda. Thank you all. Well, ladies and gentlemen, with this, we are going to conclude this session. And so we've had so many sessions today, and we've had statistics, we've had, all the facts and figures and all the serious talk. Now it's time to have some fun and enjoy the evening. So all of you just go back, relax, and come back at 7:30 here. We have a very beautiful evening, a musical night and a gala night planned for all of you. So see you all here at 7:30. Get dressed up, make some new friends, and we'll have a lot of fun tonight. Thank you.